Hello, I'm John Howard, and in this short video today, I'm going to cover the April 2025 short-term rental market. Just real quick, while that might sound like, maybe not the most interesting topic, I just kind of want to give you like maybe a little bit of color, on me. I've actually done short and medium-term rentals, furnished rentals, basically done about 5 of them. If you look back, I've had actually 4 businesses that I've gotten up to 7 figures plus per year, and did short and medium term furnished rentals completely alongside of actually running all of those businesses. And the reason I'm doing a lot of this content is that I have a lot of insight on it, right? I've been doing these short and medium term furnished rentals for literally 2 decades, and in general, it's really nice to have frequent and continuing and reliable cash flow from things like real estate. And then also you get to build equity, and then you get a lot of tax savings. So you'll see in some of my content or videos that I talk about turning your tax liability into a scalable investment. Some people are make $100,000 more, in which case they should a lot more strongly consider it, because not only will they be able to reduce their taxes, but they can also pretty much qualify for a mortgage easier than anybody else. Now, even if you aren't, a high income earner, it's still sensible to consider, because in that case, obviously it's going to be harder for you to get a mortgage, but at the same time, you're going to get the tax benefits and you're going to be building wealth. So the reason you build wealth is basically you get a mortgage and you pay that mortgage down. You make the property nicer, you have cash flow. Usually, well, ideally, you would have good cash flow from the property goes up in value, and then you're also paying you're paying the mortgage balance down, and it's going up in value. And what you're doing is as you're running that business, you're basically building yourself wealth, and you're creating yourself a retirement alongside of everything else that you're doing. You'll see one of my other videos, I talk about how the simple, stupid, easy retirement formula, where you can take one rental property, and depending on its appreciation, in 10 years you could have $500,000 or $1 million in equity in that. And it's just really a very practical way to design a retirement, right? Okay, so anyway, so here, about the video, I'm going to go into the April 2025 really specifics on the short-term rental market. I think it's really crucial to cover, also because, like, even for me, one of my medium-term rentals, and I kind of do short-term on it sometimes. I've had it a long time, and I always make improvements whenever I can, but I need to fix it up quite a bit, and there's some things I need to do. So, and also, I've found it, a little bit more challenging than usual to kind of do well on Airbnb. And I think that, well, it seems, certainly after analyzing the April figures, the April 2025 figures, hosts that are at the cutting edge and have really, really, really nice properties are the ones that are doing well. And Airbnb continues to really dominate and perform very well in terms of a site, and getting people, lots of different travelers using it, obviously lots of hosts. So let's get into the numbers and show you how everything was in April. Okay, so key takeaways. April demand rose 10.1% year over year. Revenue per available room, which is also, considered a RevPAR, increased 12.7%, the fastest growth since November 2024. Supply growth remained slow at 4%, with new listings declining. Thank goodness, right? Resort markets outperform urban areas in forward occupancy pacing, as budget-conscious travelers hold back in cities. February and March saw weaker demand growth. April delivered a blockbuster performance, mostly due to late spring break on the 2025 calendars. Demand nights in April grew at more than 10% year over year, and revenue per available room grew at 12.7%. Key U.S. STR performance metrics for April. RevPAR, revenue per available room, again grew 12.7% to $161.93. Available listings were 1.68 million, up 4% year over year. Total demand nights rose 10.1% year over year. Occupancy was 7.2% higher year over year. to 53.4. Average daily rates increased 5.1% year over year to $303.39. Repeat rent index increased by 4.8% year over year. We'll cover that in another video. Nights booked increased 10.3% year over year. Supply slows. Mortgage rates rose from approximately 6.6% to 6.8%. Home prices are expected to climb 4 to 5% year over year. For the previous 8 consecutive months, supply growth listings have experienced year-over-year growth between 3 to 5%, including April's 4% gain. New listings had shown some growth earlier in the year, but then slowed in April. New listings declined 3.7% year over year. Demand and bookings. April saw a double-digit demand growth, with total nights booked up 10.1% year over year. This made April the second strongest month for demand growth so far in 2025, just behind January's 11.5% increase. To find a similar level of growth to that, we'd look back to August of 2024. Book nights grew by 8.2% year over year. With demand up and supply growing steadily, occupancy rose by 7.2% in April to 53.4%, an improvement over April 2024. Occupancy remained slightly below April 2023 and pre-pandemic 2019 levels, which were 56.5%. 2025 occupancy has been tracking just below 2023 levels. Coastal resorts led year-over-year demand growth with a 16.5% increase. Small city and rural areas up 13.5%. ADR and RRI growth. Average daily rate is ADR. Growth picked up in April, rising 5.1% year over year. ADR growth leveled off around 5%. The repeat rent index, which reflects pricing changes for the same properties year over year, rose 4.8%. Basically just meaning people can charge 4.8% more. Coastal resorts once again led price gains after a 3.9% rise in March. Coastal ADR jumped 7.4% in April. Location trends. Average daily rates increases were seen within top 50 markets, which exclude most mid-sized cities and include a handful of ski destinations, although 9 markets experienced declines. California swept the top markets for ADR growth in the 3 location types represented in our top 50. Anaheim up 18.2%, San Diego up 17.8%, San Francisco up 17.6%, Oakland up 14.7%, Lake Tahoe up 13.6%, Long Island, New York, up 12.8%. Notable urban markets with strong listing growth: Jersey City, Newark, 20.4% up, Chicago up 13.2%, Boston up 12.8%, Washington, D.C. up 11.7%. Also, Cape Coral and Fort Myers, Florida stood out with positive 21.3% listing growth. Pacing data. Future booking demand has each month pacing between 8 to 10% higher than in the previous year. Listing growth between 4 to 5% suggests occupancy should be tracking positively. Lower price properties are seeing the sharpest drop in occupancy pacing. This might be cautious behavior from budget-focused travelers, either delaying bookings or opting out of summer travel altogether while waiting for economic conditions to stabilize. Booking lead times show a similar trend. Since September 2024, median lead times for budget listings have consistently declined. In April, lead times in the economy tier fell further, illustrating more last-minute behavior in the lower price segments. Across all tiers, lead times have been trending downward since May of 2024. When looking at individual top 50 markets for June through August, resort locations dominate the top tier for occupancy pacing, while large metros make up the bulk of the underperforming group. The high supply growth in urban areas may see some difficulty being absorbed with the combination of an economic downturn and reduced international travel. Resort destinations would tend to attract domestic leisure travelers are showing positive occupancy pacing. In contrast, urban areas, especially the downtown cores of large cities that rely more heavily on international visitors, are seeing notable declines. So there you go. So that is some information on April. In general, I mean, I think it is pretty interesting. I mean, it's when you look at some of those percentages. I mean, those are when you see something like 10 to 20% increases. I mean, it's pretty compelling. But overall, it's pretty consistent, as you can see. I mean, I think the thing with Airbnb is if you're a host, you kind of have to be on the cutting edge. You really have to be on the cutting edge in terms of like your properties, all the furnishings and everything like that. And then on top of that, you also have to, keep showing up. The way that Airbnb system is the more that bookings that you do, the more that you show up. So there you go. So that is the market trends for April. Tell me what you think. I mean, are you getting into this, or are you already a host? If you like this video, if you like this content, consider subscribing to the channel. You can also give the video a like. What I will say also is if you have an interest in communicating with me, or you might want to be learning from somebody that is a little bit further ahead of you, I've got some links in the description. I have something very simple. It's called an SMTR kit, extremely inexpensive. It's a short and medium term rentals launch kit. I've been doing short and medium term rentals literally for the last 2 decades. And I have, that kit is very inexpensive, but I also do coaching if you're interested. Even that is actually, a very light and inexpensive, options that are in there. And there's also an email address in there if you'd like to. In the meantime, if you have any questions, drop them in the comments below. And if you're already doing Airbnb and you're, drop in the comments below what you're seeing. Are you seeing a lot of success? Are you seeing growth? Or are you seeing it slow? Let me know. Thank you. Have a great one.